Hello everybody, welcome to our official first edition of 2022. Hope you had a fantastic New Year's Eve. Hope all your holidays were amazing, and we took a little chance to regroup and get back into what was important in our lives, which is family, friends, and experiences. But now that 2022 is off the hook, we can now get back to some trading and investing, and of course, still prioritizing family and friends. Just so everybody knows, I did not make any change to the studio. I'm still in the original office. I'm having issues moving everything upstairs to my new office, so hopefully at some point in the next week or two, I'll have that all set up. I was really hoping to start 2022 off on a great note by having this awesome new studio, better sound, better video, better audio. Yeah, but we're stuck with this garbage that we have now. All in all, I think you guys are all right with that. So hello, everybody. I'd run through the whole list of names here, but thanks for all the well wishes I received over the holidays. Hope you guys did fantastic as well. Okay, so you may have seen I put a poll up on Twitter, and that Twitter poll was asking, how many of you think it's going to be a Santa Claus rally this year? Of course, as you guys might remember, that Santa Claus rally goes from the last 5 trading days of the year, which started December 27th, and goes through the first 2 official trading days of the year, which goes through tomorrow's close. Now, right now, we're looking pretty decent. I thought I would share that with there and just kind of show you that to start, and then we'll go from there because I got a bunch of listener questions. So let me bring up this one. Here's our chart. Still have my buttons all messed up on my screen, but we'll do good. The vertical line here is where we have the S&P 500, and this is the ES. What I should be doing is using SPY because that gets rid of gaps. And you'll notice that as of right now, where we are at this exact moment, we are up 1.19%, which if you looked at the poll that I posted, would not be considered a Santa Claus rally. Santa Claus rally, as I put, was over 1.5%, which is the historical average. So right now we're just a hair underneath that. Of course, you got 1 day left. It's up 1.19% on the SPY. We had a 0.5 percentage point gain today on the S&P. All in all, looking pretty good, although it was really a bulk of 1 day's major trading. That was that Monday, December 27th, when we had this huge pop up, and really just been kind of bouncing back and forth sideways over the last 4 to 5 trading sessions. So curious to see what it'll end up being. I will post the results of that poll on tomorrow's show when we get things kicked off, and we'll see if in fact it was a Santa Claus rally if it gets above 1.5%. So all in all, things looking pretty decent on the S&P front. Fro's neues Jahr. Oh, Mike, you're going German on me, huh? Buon anno, tanti auguri. I guess I could go to different languages, but we'll keep it mild there. Breakout hammer candle forming. Well, it's interesting that you mentioned that one, Jerry. I'll move this line. Holy cow, Tibor! Are you kidding me? Tibor, what was that for? Thank you very much. I'm going to start blushing a little bit. That's the biggest contribution that anybody's given to the show. So, Tibor, wow, man, thank you. That's very awesome, very nice of you. I will put it to use in the new studio, or maybe even a nice bottle of whiskey with your name and honor. So, wow, thank you so much, Tibor. That means a lot. Appreciate that. Wow, I'm flabbergasted. All right, so the hammer that Jerry's talking about, it says breakout candle forming. Remember, when you have a hammer formation, the real power is after a down move, right? So you ideally like to see this after a strong down move. Right now, it's really just consolidating. And if we look at this price box, which I guess we could start the year off with a yellow box, why not? I'm just going to put it in there just to see the range that we've been in for the last 5 trading sessions. It's still not anything that's huge. It's not that critical at this point. However, you're right. If we looked at what this meant for today's trading on the SPY, it meant big move, right? It meant positive energy. At one point, we had this nice red candle forming, and then it just ripped up to the upside, closing near its highs for the day. So the momentum is there for a follow-through for tomorrow. We'll have to see how it pans out. But, right now, we have this kind of top of the range mapped out as well, which is going to be right around 479 on the SPY. And you can see that low point, which I'll keep down there at 472. So all in all, you've got about a 70-point range on the S&P or 7-point on SPY. All in all, I don't think this really screams of anything other than a little bit of sideways action for now, because the big move happened the week before. You guys can see starting on December 20th, this monster move. That, my friends, was a great rally. Now, most of the other indexes look similar. Here's your Russell 2000. Russell actually looking stronger, but still inside the yellow box, much to Tom's joy out there, because he's got some spreads on the Russell, I'm sure. So, it looks stronger because of today's candle formation, but really grand scheme of things, when we zoom out, it's nowhere near as strong as that ES. ES all-time highs, knocking on the door again. Russell's like, oh, well, we're back in that sideways trading range, bored as hell. Now the Dow, also knocking on all-time highs, right? We have the highest closing price we've ever seen in the history of the Dow Jones Industrial Average today. That's noteworthy. Now, it's not an all-time high intraday, but just simply the closing price. So a huge move up there in the Dow. I say huge. It was up 0.55% today. We'll have to see. But again, S&P, Dow, and then we'll take a peek at the NASDAQ as well. Yellow box for life. I actually did look at, I was doodling around, Tom, creating little ideas for a t-shirt design for something with a yellow box incorporating the TraderMerlin logo, but I just didn't come to any conclusions. But I'll work on that this year. Here's your NASDAQ, which, there's so much, at least from my perspective, a lot of pessimism out there, and people talking about, oh, well, there's a big pullback coming. It doesn't say that yet. It still, to me, looks real strong, although it has slowed down a little bit with this chop we've seen starting from last November. So not the greatest, but all in all, we're right back up there, challenging all-time highs yet again. NASDAQ goes up 1.06% today. Other notables, crude oil. Crude oil was up 1%, but we've also seen this one have a great rally starting that same day, December 20th, when it was down around $66 per barrel. We just hit $77.50 2 days ago. So all in all, a great move, an $11 move up in crude oil. Of course, if you're driving a car, it's not a great move up in oil, is it? It's never a great move when your commodity that we put in our vehicles moves up that much. But nearly a 20% gain in less than a month. That's pretty impressive. Nice move there in crude oil. Yeah, Bitcoin bounced a little bit today, but still looking really ugly. I do think you'll see it challenge this 42,000, actually get down near this 40,000 mark. I did buy some more Bitcoin just recently, just dollar cost averaging, if you will. But right now, Bitcoin looks pretty ugly, although we'll offer some forecasts and thoughts on markets and crypto here in just a little bit. Now, the one that was surprising as well was this pretty sharp down move here in the gold futures. That also hit silver as well. So unfortunately, gave back a little bit of my gains in silver, but still holding it. You had a down move about 1.5% today on gold. But grand scheme of things, where's it headed? It's just sideways. So while it was down 1.5%, it didn't break any key levels, didn't look that bad on the big picture. Bad day for me, got ripped in gold, and I dang it. Sorry about that one. Yeah, gold, you look how big that candle was. We haven't seen a red candle for a month that's that big. So it was a pretty substantial pullback today. We'll have to wait and see what tomorrow holds or what the next few days. But all in all, it still looks good. It just gave back 2 days worth of gains. Not that big of a deal. Of course, if you're trading the futures, that can add up really quick. Oh, yeah. You like Charlie Lee, huh? Yeah, I don't know. My optimism on Litecoin is waning, that's for sure. And then here's SLV, just so we can bring up those two as well, because then we'll get some talk track on it. We've got that yellow box that we drew in there. We'll keep this one stretched out because I think we'll see it range bound for a while here on silver. Maybe challenge those highs we saw back in November, which brought us up to about 23.50. Okay, so that was kind of the broad markets. I guess I could go into individual things if you would like. Of course, Tibor, or whatever you want to talk about, since you're the big contributor today. Thank you very much. I did have some questions, and let me go over here. I know my graphics are lagging. I really thought I could do better graphic for the kickoff to 2022, but this is what I came up with. I've done better. So Lee asked this one, so what are your forecasts for the markets for 2022? I'll be honest, I don't like doing forecasts. You know why? Because I've never been right. When I say right, I mean I've never nailed exactly what I thought was going to happen. So if I say, oh, well, I think the markets are going to be down 15% for 2022, to me, to be right, it has to be down 15%. If it's down 16 or down 14, I'm not right. So I've never been right, at least nailed it exactly at the number. But I guess I can go through and run through my assessments of it. And as I do it, what I'll do is I'll ask you guys what you think, and then I'll go through an explanation of what I think. Just kind of curious because there's a gentleman who was commenting on a Twitter feed talking about Robinhood, saying, hey man, Robinhood's a buy point right now. It's going to be a short squeeze right now. Las, thank you very much. Appreciate that so much. That was good. It's been my big payday for the year, right? I can pay for all the the hosting fees for the podcast and videos. Oh, thank you guys so much. I appreciate that. So this guy was talking about Robinhood, right? And of course, you guys all know I am still bearish on it, although I have to admit, at some point, you'll probably see a buying opportunity here in Robinhood as they'll probably sell their assets. The big thing here for me is if the SEC does get rid of payment for order flow, Robinhood's done. Robinhood will absolutely be done. So that's their whole business model is selling order flow. So if that goes away, they've got no income unless they completely change their business model. And if they do, a lot of the millennials will probably move on to somebody else. So here is Robinhood up in the hood right now at 1851. And again, I'm overall bearish on this thing, but I do think you'll see some buying opportunities come in. And this is, I guess, the nature of the beast. You always have markets operating because there's a difference of opinions. I may be bearish on something, you may be bullish, and that's fine. Everyone's entitled to their own opinion. And actually, the truth of the matter is, you can be bullish on something, I can be bearish, and we can still both make money. It's all about market timing and those types of things. So let's look at overall markets and see what we can find here with regards to opportunities. So I'll start with the big dog for me anyway, which is the S&P 500. Now, as we've mentioned on the show in the past, I think this is all becoming one very tangled web of macroeconomics. I have been watching the Fed meetings. I normally don't watch the FOMC meetings, and I have been glued to those press conferences to see what he's saying or get a sense as to how things are operating. So for me, the Fed is still in the driver's seat of the overall U.S. markets. Don't fight the Fed. However, the Fed right now, as you guys have noticed, has all of a sudden taken a much more aggressive approach at tapering, meaning they're not going to be spending as much to support the economy. So to me, that is a huge factor for my analysis on 2022. So let's start by going, and I'll ask you guys this question. You can throw in your chat and we'll see what happens. How many of you... what is your forecast for December 31st of 2022 for the S&P 500? What do you think is going to happen in the course of one trading year? Right now on the S&P, we're at 4784. All right, so we're lofty, 4784. I guess I could put a line on. I'll put a line up here just for you guys. So that top line is where we are at today. Right, it's a couple points off, but you get the gist of it. Where do you think, forecast-wise, we will be at the end of 2022? Now, it's a tough question because personally, and as you guys type this in, I'll be dancing around a little bit so I can come up with my answer. But my overall thing is I don't really care where it goes. I'll be honest. I don't. I'd prefer it to go down because I would probably do much better on shorts. However, what is my overall thought? My thought is this. I'll start off by looking at the driver of the market, which is not, in this case, supply and demand. It's the Fed, which is fueling supply and demand with their ever-cheap money. Now, they are going to raise rates in 2022. I think that you're going to see a much more aggressive stance on raising rates, specifically if inflation does continue to rise. So, remember, 3 months ago was one rate increase potential for 2022. Now they're talking about 2 or potentially 3. I think that's probably in line. And if it really does get out of hand, I think you're potentially looking at 4. So what that means is the writing is on the wall for the overall markets that the Fed is not going to backstop the market like they did. Remember, they're worried about the quote-unquote economy, not necessarily about the equity markets. Now, that's the first piece that is swaying my opinion. The second part is earnings. So if we look at earnings and you have $17 trillion pumped into the market in the last 2 years, companies are afloat with cash, right? Earnings look great, but those numbers aren't going to be sustainable going forward. So if we see the earnings numbers start to decline in 2022, that could put another element of downward pressure on the market. And I personally think that's probably a more important one because when people buy equities, when they buy stocks, they're looking at valuations. They're looking at income streams. They're looking at earnings, right? Am I going to receive some payment for this company earnings growth? If there's no earnings growth, they might be looking for other places that they can get money. So my target is bearish on the year. I actually think that at some point during 2022, we will have a 20% correction. And I just think what will happen is I think it's going to go down to 20, and then we'll probably see a big bounce. My guess is that the 20% will come on the tail end of the year as the picture of inflation, of bad earnings starts to compound, and then the last week or two of the year, maybe all of December, we have a nice bullish rally which takes us away from that 20, and I think we'll end up down around 15% off of our current levels. I know, you're like, oh my God, always the perma bear. Well, look, I could be totally wrong. So let me just go from where we are at right now and see, and what I'm going to do after the show, guys, I'm actually going to take all your numbers, I'm going to write them down and see where we stand at the end of the year. If I go from right where we are right now and go down 15%, the reason I bring this up is I want everyone to realize that 15% is really no big deal. So there's 15. I'm going to put a marker on the screen so you guys can see that one. All right, so a 15% drop in the S&P 500 puts us at roughly 4,071. And then the 20% mark, I think I already mapped that one out, is down here right around, a little bit further. There we go. 20% would be about 3,800. Now, some of you are probably going, oh my God, that's crazy. There's no way we could sell off like that. Well, yes, we can, absolutely. And if they take away the financial mother's milk of capital from the markets, it's going to tank. But look at, if I go monthly here. Let's go monthly. All right. Notice the levels that I put in. And this one, these aren't part of that discussion. Notice those levels up top. I mean, I think that everybody here could look at this and go, wow, even if we did fall to 3,800, no big deal, right? Who cares? That's nothing. I think that we'll see that this year. I hope we don't break it, because if we do, then I think then you see an aggressive move to the downside and things really start to tank because of fear and kind of market hysteria, because we're now, in a bear market, quote unquote. So those are my targets for the S&P 500. I think that you'll probably drop 20% at some point. My guess is probably October, September. And then we'll bounce the last week or month of the year and get back up to right around 15%. Yes, Margaret, my proxy is, when I say markets, I'm generally talking about the S&P 500. Absolutely. Which is interesting to see that the S&P actually beat all the other indexes this year in market gains, which is kind of interesting. So let's see. Tom's got 44.13. I should write these down. 44.13. What else do we have on here? Definitely have a hit above 5,000 by then. Okay. So Walter, you're seeing an upside. All right. That's very realistic. I mean, that's not that far away from right now, right? You're really close. So let's see. I'm trying to write these down. Walter says 5K, and then we've got Koja plus 18%, huh? Wow. That's a big pop. Let's just map out what 18% would be, just so you can kind of put it into perspective what that might look like. Let me just go here. 18%, huh? I mean, I'm sure you'd love that in your 401k account. But if we go up 18%, you're looking at roughly 5,600 on the S&P, which I guess would line up with what Steve Pratt's saying, 5,250. I should probably bring on Jeff Manson, because Jeff Manson was calling for 5,000, but he would call that like 2 years ago. So yeah, interesting. And NJ, I'm pretty sure you're looking at the SPY, right? So when you do, I just add a zero on. You're saying 3,800. Yeah, I think 3,800 would be a logical, but that's to me like the dead low. I don't see us dropping below 20%. I think if we do, the Fed will step in and do something as they usually do to help that market bounce. If you look at what happened in 2018, we had the market fall to, we were at a high of 1576. We dropped to 1260 on the S&P 500, and that is exactly 20% off of the highs. When that happened, the Fed immediately jumped in and said, we're going to do I believe it was a 75 basis point cut before the market opened. Market was down 1,000 points, and they saved it and brought it back above that negative 20% drop. Then a few weeks later, we had Bear Stearns and Lehman Brothers, and they said they're going to bail them out, which brought us back above. But ultimately, they couldn't stop the landslide, if you will, of negativity, and we had more downside movement in the equity markets. I don't think you're going to see a catastrophic sell-off like we did in 2009. I don't see that yet, although the writing is on the wall given how much it's been propped up. But hey, let's just start with 20% as a max down. I really don't see us getting too much higher from current levels. I really don't. Heck, 18% would be a hell of a goal. And again, does it really matter what I think or what you guys think? And not to sound condescending, but it really doesn't matter, right? Markets can do whatever the hell it wants to do, so we can go through and map out a plan in place. So for now, when you look at this on let's say a weekly time frame, this market looks fine. It's not looking bad at all. Right, you got a little bit of consolidation. We just broke out of that. My guess is that will probably lead to an upside move here. Do we get to 5,000? That's possible. 5,000 is not that far away. Let me bring up this line here to see exactly where that number would put us at 5,000. I'll put that right here for you guys. So 5,000 percentage-wise from current levels is roughly, almost 5%. No big deal. 5%, it could happen in a few days the way these markets have been moving. So all in all, very doable. But when we start to see some new lows be put in, then I'll start transitioning my opinion. I just think we're way too long in the tooth, and the fact that the government is really going to at least have to tighten up their spending, that's an issue. So Big Eb says there's more propping coming. I'm curious, how do they prop it? I mean, what do you think? You look at what weapons the Fed has in their arsenal to continue to prop up the market. They've already created a problem by flooding the market with money. We got too much money supply. That's obviously creates inflation pressure. So they're trying to rein that in by tapering. So they stop the mortgage-backed securities, which of course is propping up the housing market. They're propping up. They're going to cut their purchases of treasuries, which locks in the short end of the yield curve. Which brings me to my second forecast, which is what's going to happen to the bond market. Well, look at that one. Let me bring up our 10-year here. And I know that the treasuries aren't the 10-year, but when we let that short end of the yield curve go and it starts to move upwards, then I think you start to see bigger swings. So if we look at this pattern right here, this is an ascending triangle, right? And it's not drawn perfectly. It looks something along the lines of that. This would be a very lofty one, right? So when you have an ascending triangle like this, and you guys can see it's been hitting its head right against this 1.7 mark, hits it a few times, boom, boom, boom. But it's making a higher low each time, which tells us that it's gaining strength. And that means that rates are rising. Right now we are looking at a 1.63 yield on the 10-year. Well, one thing that a lot of people like to look at is what's called a measuring object. So let me put in a measuring object. And usually that measuring object goes from the neckline, or baseline as they call it in ascending triangle, to the bottom here. And if that means that if this does break, then it's saying their target is just about 3%. Look, I'll tell you, I don't think we'll get to 3%. If we do, we have some serious problems, right? If we get to 3% on the 10-year, that means that all of a sudden those mortgages that people have been enjoying at sub 3%, those are gone the way of the dodo. We won't see those back again for some time. But I do think we'll probably get to about 2.5% this year on the 10-year, simply because the Fed has to stop buying. They can't continue because they have to raise rates. It's that old damned if you do, damned if you don't. So I will mark all these out, but my target is 2.5% on that 10-year by the end of the year. And it's not that far away. We are building pressure. It seems like we've been kind of congested here for a little while, but boy, if we break above this 170, 180 mark, that 250 could happen fairly quickly, especially if they start raising rates. Three new Fed members will be doves, in my opinion. Potentially. I mean, obviously, if you're an elected official, you don't want somebody who is hawkish, right? You want them to be doves and more careful. And, let's not raise rates too quickly. Let's keep cheap, easy money. That you want that in there because that means the markets will continue to move to the upside normally, right? But at a certain point, you put yourself in a corner, and you could potentially have much bigger problems in the future. So there's two numbers for you that I'm looking for. I'm looking for a 20% drop max in the S&P with the end of year somewhere down around 15% overall. We're due for a negative here. It's been quite some time. I think Big Ed was saying about 3 up years in a row. Not only 3 up years, but 3 substantial up years. I mean, these have been very, very good years for the equity markets, and markets don't go up forever. It may seem like that when you look at the long-term charts of the S&P. I mean, here's your S&P again. That long-term chart, I mean, it just screams the upside. And, you have to ask yourself, during these periods of 2013, 14, 15, 16, 17, 18, 19, these were good times. Those were times where you and I had normal lives as a normal American, or not even just American, but I know we've got people here from Europe. We got people in here from Canada. We got people in here from Mexico and Middle East. Your lives were more normal. You could go out to movies. You could go to restaurants. You could do all the things that you could without all these restrictions and lockdowns, and so you were out spending money in your economy. We all went on lockdown, and that locked things up. Strange to me to see that when we went in a lockdown, that our markets continued not only up, but at a much more identifiable angle. Right here where I have my cursor is where our markets bottomed in 2020. That's a ridiculous move, all right? Back here is when everything was humming, everything was great, and all of a sudden markets go to hell and they move up even faster. Nobody puts Jerry in a corner. I guess nobody puts Jerome in a corner, right, John? We got to do it for Powell. Nobody puts Jerome Powell in a corner. So this is probably the biggest head scratcher I have is why were these things so ridiculously strong when we weren't actively spending and doing what we were normally doing. I mean, the numbers, I'd love to see if I could find them. Talking about the number of savings in America is near the highest it's ever been because we just weren't spending. Well, maybe this is the optimism of Americans finally spending, but I don't know. I think this has to do with the Fed's printing, and again, that will probably come to an end. Right? It does, Jerry. It's funny. I was just out with some friends. We actually went up to a Manhattan beach yesterday and had lunch there, and it was funny because my girlfriend's like, "Do I need a test to prove, that I don't have? I've been tested within the last 24 hours because we were up in NorCal and they wanted to test. And wherever you went, it was like in this one county, you had to prove that you are cleared within the last 72 hours to go anywhere. So yeah, very, very different type of environment now. But you would think that would be a negative for our economy because you're not out spending and doing your normal things. I mean, the companies in my house that benefited during COVID were Anheuser-Busch. Let's see, what else was benefiting? Netflix, right? YouTube, those types of things. Anyway, so that's my two. One was bonds. I didn't see anybody comment on their thoughts about bonds. Anybody see bonds yields going down? Right? I really don't see bond yields going down. I'm amazed the S&P slope is so steep and even steeper than prior to 2020. Right. I expected it to move up with all the stimulus, but my goodness, that's crazy considering where we were. And I always love this one. I think I mentioned this to you guys before. If you look at the dot-com boom in the late 90s and then the bust, I mean, this is textbook material. When I say textbook, it means that this is in literally collegiate textbooks talking about the dot-com bubble. And then you had the financial crisis, these two shaded areas. These were like travesties for the financial market. Oh my goodness, they'll never be the same. They look so insignificant right now. It looked like nothing. At the time, this was like a totaled vehicle. Now it looks like a scratch on your door panel. No biggie whatsoever. So, at some point, we're going to get these things back. This will come back down. And I don't think we'll get to 2100 or anything, but that's a 50% drop in the market is definitely possible. Remember, this one right here, this first one was a 50% drop. And then in 2007 to 2009, that was a 57% drop. I'm not here to spread fear or show that .com and subprime bubbles on a log scale. Yeah, you like that. You love the log scales. I don't like log scales. Here's your log scales. All right, so I'm on logarithmic now. They're still pretty substantial. They look bigger, but when you look at the picture now, it still says the same thing, does it not, Tom? It still says, you know what? There's a pullback coming. There's gonna be one coming here, and again, I hope we're all on the right side of it when it finally happens. So, all right, and what I got? So, Rob L says 2% for the 10-year. We're almost there, right? I mean, that's a pretty safe bet. I like to go a little bit crazy with my estimations, but getting to 2.0, yeah, I mean, and that's the next logical stopping point, right? That's your next supply area that we saw back in November of 2019. Yes, it does show it a little better with regards to magnitude, yes. But still, I think that at some point that house of cards is going to come crashing down. Anyway, so there we go. Well, remember, Patrick, it's tricky because you could call it a 75-degree angle. And this is the beauty of technical analysis. You can say, oh, that's a 75-degree angle, and some analyst is going to come out here and go, no, it's not. That's 45. And they just change the trajectory. Flush out the amateurs in each crash. Pretty much, right? Pretty much. And I think that there's two things, Margaret, that are noteworthy from that statement you made right there. It says flush out the amateurs in each crash. Not only does it flush out the amateurs, but it also creates some of the best buying opportunities that you'll ever see in your life. So I'm really hoping we get a monster crash, because if it does crater, if we get one of those apocalyptic 50% plus declines in the market, oh my goodness, I'm going to be loving it. I guess I was too ignorant to look at the crash, the dot-com bubble when I was there and see that as a buying opportunity. I was actually buying as it was dropping and then getting stopped out because I was just getting crushed. The 2008 one, it was more of a buying opportunity for me. But now I have a lot more capital, and I think that when it happens again, it's going to be one of those, let's pull the Larry Jacobson and run through and look at some of the fundamentals, not technicals per se, but look at some fundamentals and say, which ones are really undervalued, and now I've got some solid long-term plays. You get some of the best runs ever. The key is to have capital left when the markets drop 50%, right? Most retail investors, per Margaret's point, they get washed out. They get stopped out. They get margin called, and they're left there literally with nothing in their hands. Whereas the astute ones are going to do one of two things. They're either going to pull their positions out of the market altogether and go to cash, or they're going to short the market, which is riskier. But hey, I'd rather make money up and down, and even sideways, right, Tom? Let's see. You think increase in yields will initially be good for crypto? I do think it will initially, but then I think it could actually hurt. So one of the things, if you look at actually for our CIL program last night, maybe I don't know about that. Billionaire? I don't know. If I do, I won't be doing it every day, NJ. Every day is a pretty tough haul to do this show every single day, but I enjoy doing it. So, when you look at things like cryptocurrency, so for example, I can stake something like Polkadot. So let's go to my chart over here and bring up DOT. So I can stake Polkadot and be getting 12% yield or more, right? I'm actually making about 14% by doing it on my own, but you can go to a lot of sites and get 12%. So if all of a sudden we start seeing that, because this is not risk-free, right? Polkadot there's risk to it. But if I can see all of a sudden that risk-free rate is rising and rising and rising, then that may actually take money away from crypto. Because now people can look at it and say, you know what, I can go to a safe haven asset like the 10-year, or short-term treasuries, and get what? 3, 5, 8%? I mean, who knows how high it could potentially go. But at a certain point, if the treasuries get high enough, I think it could actually start to eat away from some of the allure of cryptocurrencies and digital assets. All right, Tesla shorts. Yeah, that's just one that you won't see me short. Especially Elon Musk. Boy, so if you guys want some humor, follow his Twitter. Man, he's always got some crazy tweets out there. All right, what else do we have? So I talked about the equity market forecast. I've got bonds, kind of in general. The cryptocurrencies are a different one. I think that there's a couple that are noteworthy. So, for example, we look at this crypto space. There's over 16,000 different projects right now, which is absolutely nuts. I think that 2020 will be a year of two things for crypto. Number one, it will be a regulatory year. I think you'll see some clarity with regards to legal talk, meaning are they securities? Are they assets? Are they cash? What are they? So now we can put investor protection, whether it's FDIC or SIPC insurance, on these assets. So I think some of them will become further legitimized and have much bigger upside moves. That means we look at legitimizing things. Does that mean that Bitcoin continues to move to the upside? Right now, looking pretty weak. I still think we're headed down in Bitcoin, but long term, you talk 5 years, I'm very bullish on it, but I still think there's some downside movement. You look at something like Ripple, XRP, right? If they settle their case with the the SEC, and they're cleared, this thing could really start to skyrocket. It seems strange to me because I don't see as much use case application right now. But you look at the amount of money they have, I believe that a lot of it is being invested in technologies, lobbying, so that when they do settle with the SEC, these guys will be reaping some rewards for it. So I think it's sifting through this universe of digital assets and finding which ones work best and which ones have the best potential for the future. Things like Shiba Inu, trash. Right? This is not going to make it. This thing will drop all the way back down to the origin of that giant rally we saw at some point. It'll just fizzle out and disappear. There's some like Matic or Render Coin that I think are fantastic opportunities. Luna. There's also ones like Dogecoin, which are, again, trash and should just probably disappear, but they're a money grab. So this one's much harder to I guess, evaluate the market capitalization of the entire industry. Right now, if we look at the market cap, you're at about 2.2 trillion is what it says. I think it's higher than that. That's a weird number because I thought it was actually closer to 2.38. Actually, I'll have it. Let me check my other number. I have an app here that I like to use to track it. It's called it's 2.35 trillion. I think that by the end of 2022, you'll be back above 3 trillion, which is a monster increase, right? That's a $700 billion increase in the value of cryptocurrencies overall and in the entire digital ecosystem. So to me, that's a very optimistic goal, getting above 3 trillion. Granted, we've been there before. You guys can see we just tiptoed across it back here in November. So I think you'll see more of a pullback down, maybe get down into this 1.8, and then all of a sudden it really starts to take off again. There's some major things happening in 2022 that could really change, I guess, the landscape of digital assets. And plus, I think you have more institutional adoption than we've ever seen in the digital asset space, which will probably make it the best performing sector in the equity markets, would be cryptocurrency. So let's see. What else? What question I have here? Sideways to the crypto? No, I think a few of them are going to really take off. I think Ethereum's going to have a great year. I think anything to do with smart contract platforms will probably have a much better year than average because of the implementation of so many different technologies that can be put on a blockchain that's decentralized. So I'm very optimistic on those. But a lot of these meme coins, I think what will happen is regulators are going to come in and start to crack down a little bit on a lot of the crap that's out there with regards to meme coins and pump and dump scams. We have a crash. We have a crash that's waiting for an excuse to happen. Yep, perhaps a certain party won't do so well in November, and they will. You never know. I mean, you never know. Certainly, if the markets do great, one party will just brag about it. If the markets do poorly, they'll point the finger at somebody else. That's the way it always happens. Have you ever gone to a shareholders annual meeting? No, I have never gone to an annual shareholder meeting. And I'll be brutally honest, Margaret, I don't care. I don't care. Like, Larry was a holder of Berkshire Hathaway. He actually went to Omaha and got a nice picture with Warren Buffett. But to me, I don't care. You know, generally my equity investments aren't that long. I'm not looking to hold a stock for a year or 6 years or 10 years, right? I'm looking for, when equity trading, day trading or swing, right? I'll be in it for a couple days, a few weeks. I could care less about a shareholders meeting. I don't even vote. So, I mean, I vote in elections, but not for stock elections, right? That doesn't make a difference to me. But obviously, every election I vote for our candidates, and hopefully my vote has an impact on America. Let's see what else I got. Definitely looks unsustainable. Yeah, too parabolic. Yeah, that would be a big short. And here's what I think. Here's the scary part, Jerry. So Jerry says definitely looks unsustainable. Too parabolic. Boy, that would be the ultimate big short. Well, take a peek at that one again. Let me bring it up here, just because I think you have to understand there's going to be a sequence of events happening. So if we look at this chart of the S&P 500, you know, this doesn't look like it's that impressive. But it's when you zoom out and you look at the bigger picture, now it's like, holy cow, are you kidding me? And this isn't even all the way back, right? If I go back to the weekly, you see it's even more pronounced. I mean, now it's funny. I guess if you look at this, it just looks like a normal trend, right? But when you put into context, two of the most devastating events to happen in our history of financial markets were the dot-com and your financial crisis. I mean, heck, if I had more data, I'd bring up the Great Depression on here. Clearly, something's wrong. And all of us are enjoying it because you got 401ks, you have long-term investments. You know, it's looking great. But this will not last forever. Something will give. Senator Karen had me laughing. Elon Musk. Oh, yeah, Jerry. Elon is just great. He's got, what do they call it? FU money. I think some of you might know what that means. But FU money is where it's like, I don't care. FU. You know, whatever you want, you know. Senators, say what you want. I'll do what I want. I got more money than all of you put together. It's kind of entertaining. It's nice to have that. Big Eb says 40% year over year for crypto is easy. I agree. To a certain point, right? At a certain point, it will be a mature industry. Right now, it's not mature at all. It's very immature, right? That's why you're getting these 40% jumps and then some. But yeah, I have no doubt that we'll see increases like that as an entire asset class year over year. But at a certain point, when it matures, we're going to start to see those numbers decline significantly. But right now, it's just the early days. It's the early days. Love it. Trader, what about Theta Coin? My friend plays a game and he can and does make Theta Coin. I don't know all the details about that one, so I have to plead ignorance in that. But for now, I've looked at it, but I don't know all the ins and outs, so I can't make an opinion until I know exactly how everything functions. So. What else we got? Billionaires are looking into cryptos portfolios to preserve their wealth. Right. Not only preserve your wealth, Jerry, but keep it away from governments. So, you know, one of the big things is, especially with Bitcoin, is they can't take it away. I mean, who knows? If Elon Musk gets in a heated argument with regulators, they could potentially go in there and seize all his assets. Not Bitcoin. What's your opinion about Next Earth Project? I don't know about the Next Earth Project, Koja, but I'll find out. I've really... just so you guys know, the last last 2 weeks, pretty much, complete disconnect from financial markets for me. I didn't want to look at them. I didn't want to talk to people. Follow-up money. Yeah, that's it. I disconnected the last 2 weeks of the year, and now it's like, okay, let's get back into it. Starting off slow, but I'll I'll look into the Near Earth project. Let's see. Do you have a year-end target for silver? Yes. Let me go back to some charts here, and I'll just go SLV since I don't have the silver futures readily available right here. At this point, you look at silver, it doesn't look great, right? I think you have a pretty solid double bottom put in place down here right around $20, which I think some of you actually played that one, which is great. The only thing I don't like is I don't like this really most of the last year. This is a weekly, so going all the way back into August of 2020, it really has just been in this very wide range. I think that we'll end up challenging those highs we saw back in November of this year, or last year, excuse me, which is going to be right around 2350. So I think 2350 is a very logical one, but I do think that the inflation is going to start to trigger more of a hedge. And of course, I've already said this, but it just hasn't come to fruition. So I'd be looking at silver by the end of the year, somewhere north of 2350. So I know that's not exactly the easiest to track here, but 2350 I think is kind of that line in the sand, and I do think we'll break it. Obviously, because I'm long, I'm biased, and I'd really love it if we started getting up to that 26 mark, which is the next major area of supply. But even if it got there, you notice it's not like it's making any major headwinds. It's coming right back into overhead supply. Now, if we break above this 28 mark, now you're really talking about some giant move potential. But I don't think we'll get there in 2022. We'll have to wait and see how bad the interest rate issue is, inflation, all that other stuff. So there we go. What else? Elon Musk is the media narrative. Yep. I love it. He calls whatever he wants. I saw a quick snap. He bought 50 Bitcoin ATM machines. Do you know what the machines do and how long the machines have been around? Yeah, so I've used Bitcoin machines. I've used Bitcoin ATMs. It's kind of a misnomer because right now our view, I'm assuming most of you as well, your view of an ATM is, I can go make deposits and withdrawals from a Bitcoin ATM. No. Right now, it's no withdrawals. They are basically deposits only. So if you wanted to buy Bitcoin, you go to a Bitcoin ATM and you put in your dollar bills, your $100 bills, or your thousands, whatever you want, and you can buy Bitcoin from this machine. It just spits out a paper wallet. It's a little receipt that you have, or maybe even send it to one of your devices if you have the QR code. The challenge with that is, and again, you really shouldn't be using Bitcoin ATMs, the spread is usually 8%. So at least it was when I was using them. The spread was 8% on your purchase transactions. You thought Coinbase was expensive. These Bitcoin ATMs are very wide. Plus, what they'll do, they widen the spread, and a lot of times they charge an extra fee on top. So you could be paying 10, 12% in fees just to buy your Bitcoin through an ATM. Nah, don't bother. Now, at some point, they will be withdrawals, meaning I can put in my, I could send some Bitcoin there and actually get cash out. That's still yet to be developed. It's not there yet. Yeah, I'm actually, Stefan, Patrick, I'm actually playing a couple games right now, and it's interesting because they claim that you can make all this money with these games, and I've got everything set up, and it's like, I spent $150 to make 30 cents. It's like, yeah, I'm pretty sure that's like the government, right? It's going out of business at some point, so I'll look into that data. Right? It's fun to take a break. Next, we're buying virtual, okay. So maybe I have actually seen that one. There's a whole bunch. There's probably 20 different companies out there that are selling digital assets, real estate, which is kind of weird. There's one in particular that you can actually go and buy pieces of, like Southern California, but you don't actually own anything, right? You just own that grid in their ecosystem. So as this whole thing pans out and you have Decentraland and Sandbox and all these different worlds, they have their own real estate, but there isn't a common real estate. It's weird. It'd be weird if there was one world that they were all accessing and using. Then all of a sudden that real estate gets very precious. So unless somebody's using that ecosystem like Sandbox or Decentraland, if nobody's using it or playing it, that land's worthless, right? It'll just be zero. But when you have people like Snoop Dogg and other major celebrities pouring in, then all of a sudden you have 1,000x gains in your real estate. And I'm bummed because in 2017, we were laughing about talking about buying some virtual real estate, and I didn't buy any of it. I'm kicking myself because I still don't own any real estate, but I wanted to. Any predictions for any new countries adopting? It's weird seeing how quickly that has changed. So as far as the adoption of Bitcoin, we had, of course, El Salvador, and Ukraine was talking about it, and then you also had Brazil was talking about not making it legal tender, but allowing it for purchases and transactions. So it's like they were saying it's not legal tender, but we'll let you do it anyway. And I haven't heard much progression there. I think that right now a lot of people are looking at El Salvador, still trying to evaluate, is it really helping them? Are they seeing economic growth? Does it really make sense to their economy to do that? Because the IMF is actually pointing their finger at El Salvador and saying, hey, we're going to cut you off from funding. So you can use Bitcoin to make it legal tender, but the IMF will threaten you with, we're no longer going to give you protection, financial protection. So I think what happened is that scared some of the bigger countries away, saying, hey, we want IMF protection when we need it, so we'll not do Bitcoin for now. I do think you'll see more adoption of Bitcoin going forward. It wouldn't actually surprise me to see, probably not this year, but maybe in the next year or two, that it's not just Bitcoin, it's other mediums that actually transact even faster and have a better throughput time. Who made $150 that paid you 30 cents? Yeah, right. It's the game. The game makes that. So Star Atlas is one that I've been playing. Decentraland, actually, I play that quite a bit. You have to spend a lot of time to actually get resources to build NFTs, which I haven't done yet. But again, it's all done on Ethereum, which is still ridiculously high fees. Let's see. Do you see more growth outside of the U.S. in 2022? Well, NJ, that's tough because normally the U.S. is the dog that wags the tail. So if all of us, and I think as we came out of this economic malaise that we've been in from 2008, U.S. led the charge there. There's always talk about emerging markets really being kind of the canary in the coal mine, the catalyst for future growth of global markets. I still think it's the U.S. So I think if the U.S. drops 20%, you're going to see everybody in the world drop 20% or more. We are still the lead economy. China, of course, is going to probably take us over as the biggest economy in the world, but that's going to take, I think, another few years to get there. So I'm not so concerned or looking at emerging markets. I do think there's investment opportunities there, but I'm still mainly U.S.-centric. It's what I know, so I stick with that. All right, and of course, I took a screenshot of a ton of stuff that's happening tomorrow, but I didn't put it in my slides, which means I have to go over here and bring this one up real quick for you guys so I can show you tomorrow. Earnings-wise, it's funny, there's nothing happening in earnings until Thursday. Thursday has got a ton of big names. But here's what's happening for tomorrow on an economic calendar perspective. You have a lot of manufacturing and employment stuff going on for Europe. You can see there the British pound with their final manufacturing PMI. For those that are trading oil, which obviously was kind of wild today, you have the OPEC JMC meetings going on. That's all day. And again, I think 2 meetings ago, there were some huge moves during that meeting because people were leaking information out. So if you're trading crude oil futures tomorrow, be careful. It is an all-day thing. Just be ready for major rips in that. Let's see what else we have. ISM manufacturing for the U.S., JOLTS job openings, as well as ISM manufacturing prices. And this one normally doesn't get a lot of mention, the Ward's total vehicle sales. But remember, we've seen the price of vehicles spike because of supply changes, the chip crisis, etc. Let's see if those numbers continue to move on up or if it actually starts to slow down. What else do we have? That's pretty much it for tomorrow. You should write a crypto book, even though you teach crypto at OTA. You know what? There's so many people that write crypto books. I don't think I'm A, I'm late to the party, and B, who's going to buy it? It's a lot of effort. I think I need to finish my book about trading and investing first. It's funny. There's certain things because of the the FTC, that obviously we can't say. So when I did TraderMerlin show, and that was an online trading academy production, they were very careful about what I could say or not, because obviously the FTC, could come after him for saying one word slightly wrong. And even things like when I show a live trade or something, you can't do that. Oh, because it's not representative of everybody's the average, right? It's like, no, I'm showing trades as an example. No, can't do that. You can't do that. It's against FTC rules now. All right, fine. When you look at what I can do on this show, and I can pretty much, I don't have the same scrutiny as the FTC. So one of the books, the second one that I actually wrote the outline and have a lot of it written, is just the Guide to Getting Rich. I cannot make that statement on any venue for Online Trading Academy because of regulators. You're not allowed to say a Guide to Getting Rich, even though that book will be 100% about risk management and saying here are the steps that you need to take to help grow your wealth. But it's the Guide to Getting Rich, right? It's simple. It's here's a roadmap to follow of steps that you can start, whether you're 10 years old or you're 100. These are things that you need to do to help increase your wealth. So I will probably try to finish that one. I think that I'm more excited about that one. I actually really like that book. I think that helps everybody out, whether you just want to get rid of all your debt or want to be filthy rich. I mean, I think that there's certain steps that you take in your personal life, whether that's consumption, expenses, income, spending, all that type of stuff. So that book, I'm hoping I can get done at some point. I'd like to do that one better. And you know what I do? I'd love to have like an argument with Dave Ramsey, because that guy says some crap that is just so wrong. It's so wrong. And he's like heralded as this amazing oracle of financial markets. Like he said you should never, ever, ever use credit cards. Are you kidding me? I only use credit cards. Why? Because it's a way for me to increase my wealth. I'm using borrowed money for 30 days. I can buy $10,000 worth of stuff at 0 interest for 30 days. As long as I pay all that off in full every month, I'm earning points, airline miles, rewards, kickbacks. I mean, my Bitcoin credit card, I make 1.5% cash back on anything I make. Awesome. That means I now saved on my expenses 1.5% on everything I bought. It's like simple stuff that I just think sometimes is so stupid, but I guess his target audience are people who just have no self-discipline, no risk management, no money management, and they're just in debt. So fine, Dave, anytime you want, let's go and talk about the guide to getting wealthy, because I'm pretty sure that Mr. Ramsey got wealthy by doing a show on how to get wealthy. Anyway, enough for today. Yeah, and Susie Orman. Susie Q. Oh, my Creedence Clearwater Revival today? Yeah, Susie Orman. And it's not to downplay what they do. They do provide very good advice for most people. But I think that they dummy it down, and I think they candy coat it in some regards. And also their opinions, just like mine would probably do as well, their opinions prevent them from promoting or endorsing a concept which might work very well for someone's portfolio. We look at the strategy I was talked about, which is the 1% options portfolio. That is a very low risk portfolio that I'm working with, right? Because of the investments that's in and how far out I'm buying or selling these put options. But those guys, Susie Orman and Dave Ramsey, would be like, oh my God, you're crazy. Like, okay, you work with what you want to get your 8% per year, and I'll go through a very, very low risk strategy and get 12 to 15. I'm fine to have that argument with them all day long. Anyway, I don't have any connections in the market to hook me up with Dave Ramsey or Susie Orman, but I'd love to have a little face-to-face. Let's do it. Drag them out. Crypto is stupid. Just deliver pizzas to get it out of debt. Yeah, right? Hey, don't put all your money in crypto, but certainly there's a place for part of it. All right, guys, that's going to do it. Just too much to Big Ev and Tom's dismay. We're not doing hour shows. I got to start cutting back on the time of these shows, guys. I got so many other obligations now. We're still managing to squeak these ones in. Anyway, hope you enjoyed today's show. I know there were a couple questions I didn't get a chance to get to. I'll get to those on tomorrow's show. If you guys have anything you want me to discuss on tomorrow's show, I have no guest scheduled. I'm going to try to get a few people on the program to lighten my load a little bit. It's always more fun, I think, for me anyway, when I have a guest to talk to. So if you got some people out there, I will try to get them on the program. I read Rich Dad Poor Dad. Yeah, it's interesting. There's some good stuff in there. There's definitely some good nuggets in there. All right, so there's my forecast for 2022. Take it for what it's worth. I know you guys all have your own opinions, and that's what's great. Markets work because we all think differently. Just make sure that if you're wrong, you're ready to admit that you're wrong, have a stop loss in place, and move the other direction. So, yes, Big M. I say it, but I just when it's a passion for you, I'll probably keep doing close to 1 hour shows. PBJ says, could you do a show about tech analysis? You talk about studying for 20 years. Yeah, sure. Yeah, great. I could do a TA show. All right, everybody. Well, happy January. Happy 2022. I hope we have an amazing year. I'm looking forward to it. So, again, send in questions at TraderMerlin@gmail.com, and I'll see you all on tomorrow's show. Take care.